Welcome to episode 1 of Farm to Markets, where we talk about everything from farms to stock markets. In this episode, we're going to be talking about inflation and the recent NCAA ruling. So to kick it off, Alex, everybody's been talking about inflation for the last month. We've been seeing grocery prices and energy prices going up. But it seems like in the last couple of weeks, we're starting to see copper prices going down, corn prices are heading down, even lumber prices are starting to head down, along with the yield on the 10-year Treasury. Where's all of the inflation that we've been expecting?
Well, right now, I don't think we're going to see any long term. I think everything we see currently is just a recovery inflation. The longer term trends, we see companies hoarding cash and doing share buybacks. We see banks refusing to yield or refusing to lend despite no yield on their reserves. Individuals are paying down record amounts of their credit card debt, $108 billion last year. And if you look at the velocity of money, really since the late 90s, it's been trending downward, but in the wake of the 08-09 financial crisis and then the COVID recession, the velocity of money has crashed. So in spite of all this money printing, money's moving less and less in our economy than it has been in 25 years. Based on the chart I was looking at earlier, it's a more than 50% decline in the velocity of money. So with less money moving around, despite the record printing, we're not going to see any long-term inflation, I don't think, maybe just some short-term.
What do you think?
Did you say Drew or Joe?
Yeah, Drew. Sorry, yeah, Drew.
Oh, sorry, I couldn't really hear you. I agree with Alex. I think that inflation is certainly here. We've certainly seen it over the last few months, but I don't necessarily think the trend's going to continue and go into a hyperinflation environment like some of these headlines might indicate. Basically, we have the Federal Reserve keeping interest rates low for so long. We have the government injecting a ton of stimulus into the economy, and we have a bunch of pent-up demand for goods. If you think about the demand as a rubber band, it was really, really tight, and we're starting to see it lose some of its tension. So it might progress for a little longer, but I think we're at the tail end in terms of seeing the inflation.
Joe, where do you think it's going?
Well, I guess my question is inflation compared to what? Is that prices certainly are up today compared to what they were a year ago, but compared to where they were 2 years ago, we really haven't seen that much of an increase. I think a lot of the increase in prices that we're experiencing right now is a function of, well, it's kind of like when the Seventh Fleet comes back into port after being out at sea for 6 months. Every bar in town raises their prices because the demand is high. And until all the money is spent, those prices will continue to be high. Well, for a year, people were locked in their homes and didn't get a chance to spend their money, and now they do. Areas where we're seeing really high prices are the travel industry. Certainly gas prices and the price of plane tickets is higher than they were a year ago, but they're not higher than they were 2 years ago. The markets are telling us that they don't really see long-term inflation. We've got a 30-year Treasury paying 2.1%, and last year's consumer price index said that inflation was at 4.2%. Alex gave us his report earlier this week where there wasn't even one bond that is paying anything even close to the rate of inflation as measured by the CPI. I don't really think we're seeing much in the way of inflation right now.
Okay, I would say that we are seeing some inflation, but it's been eaten up by two things. One is that, I'll throw up a chart here, a lot of banks since 2008 have been hoarding cash, and typically, pre-COVID, the government didn't issue checks for money. Instead, what they were doing is they were purchasing bonds, and the cash from those bond purchases would go straight to banks' balance sheets. And I think what you'll see is that since 2008, the amount of cash that banks have on their balance sheets is going straight up. Additionally, because of the low interest rates, a lot of companies have been taking advantage of that and then using those low interest rates to take out loans, and then taking that money that they borrowed to buy back shares of their stock. So a lot of this inflation you're seeing is going in the stock market, seeing how it's at, it's pretty much at its all-time high right now. And a lot of that is from the share buybacks that they've been doing since interest rates got real low. At this point, we only got about 30 seconds left on this talk. Is anybody else have anything they want to add to this before we move on?
I think it's important just to look at inflation as it's not inherently good. It's not inherently evil. A little bit of inflation is a sign of a healthy economy. Just because there is inflation, it might be trending up, doesn't necessarily mean that we're looking under the bed and seeing the boogeyman. It's, with that said, it's certainly something we have to contend with as investors. But there's plenty of tools in place and plenty of strategies to use to fight inflation in the long run.
There's an old saying, Tom, in our industry that inflation steals from the ignorant and redistributes to the well-informed. People who have investments that are ready to take advantage of inflation will be in a pretty good position to be protected by it or from it.
And before I cut us off on this subject, I will say the last one, I'll throw up a chart on this too, is that I haven't seen a lot of correlation between money inflation and the amount of money in circulation. I think Alex alluded this to a little bit, but I'll throw up a chart here that shows the amount of money printed relative to inflation since 1960, and you'll see that there's not a lot of correlation. But since we're talking about inflation, I'll point out that NCAA student athletes are not seeing any inflation because they're not getting paid and they're feeling exploited by the NCAA. Joe, or in a recent court ruling, or in a recent Supreme Court ruling, the U.S. Supreme Court, in a unanimous decision, decided to uphold a district court decision that the NCAA was in violation of antitrust laws by placing limits on education-related benefits. Joe, we all know what a big sports fan you are. What do you think about this?
Well, I think the only thing I'm less than a sports fan is a fan of colleges and universities in 2021. If we're at the point in our history where the value of an education from a Division I school is so low that we have to pay entertainers, because that's essentially what athletes are at the university level, so much money for them to come to our university, I think all it really does is cheapen the value of a Division I education. I think my biggest interest is watching the gyrations that both state and the federal government are going to jump through to try to contend with this. There's going to be a whole litany of different laws at the state level that come out to contend with allowing competitive athletes to use their name, image, or likeness in a monetary way. And the federal government is not going to stand on the sidelines and let the states have all the fun. There's an old saying that a mouse an elephant is a mouse that was developed by Congress. And I'm really interested to see what the legislation will look like to try to contend with this.
All right. Well, we'll kick it over to somebody who actually does follow sports. Alex, what's your take?
Well, I think in general, I have no real objection to the various schools in this specific case engaging in non-monetary compensation like school supplies, books, lab equipment, etc. I think from a broader standpoint, the NCAA by and large contends that universities should not be compensating players because they're student athletes and it's amateurism. However, I kind of think this is a laughable proposition from the NCAA. NCAA March Madness makes $750 million a year for the NCAA. NCAA football TV rights contracts come in billions of dollars on an annual basis. And these sports leagues or these different conferences are treated like effectively minor leagues by various pro organizations. I have very little sympathy for the NCAA's amateurism argument.
Okay, and for somebody who actually was a Division I athlete, Drew, what do you think?
Well, for someone who was a Division I athlete and for someone who had to forego some cash prizes for races during my collegiate career, I'm all for NCAA athletes getting paid. Now, a little more philosophically, I'm also for NCAA athletes getting paid because I have a hard time telling some people what to do. I don't like the government telling certain institutions or certain people what to do. If colleges wanted to pay their athletes, if they wanted to let them accept money from other sources, so be it. I agree with my dad. I think that an outcome might be, it might affect the credibility of the academics in those institutions, but let that be. Let the chips fall where they may, see where it happens. That might just make other institutions that are more academically focused be a little more credible And then we'll see a change, and eventually there'll be an equilibrium.
All right.
But
Well,
I say, what's that?
I was going to say, as somebody who was a backup Division III athlete or Division III athlete, and then who worked for a Division I program for 2 years, I would definitely say is that college athletes are not treated that bad right now. I mean, they get food. When they're on the road, we stayed in we were staying at the Four Seasons sometimes, and I got every meal paid for, and we're flying around the country on the school's dime. So I will say, right now, it is not a bad gig to be a Division I athlete. The Ralph Engelstad Arena, where I worked, $100 million arena with Italian marble, obviously imported from Italy, and rosewood seats. But this is kind of like an Amazon delivery situation where you have, NCAA college football, which is wildly successful, brings in a ton of money, but they're treating their delivery. The Amazon is treating their delivery drivers poorly. I mean, it's sweltering hot inside the trucks. They don't give them breaks. Sometimes they have to bring a plastic bottle to use the restroom. And it's kind of the same thing with the NCAA. I've heard stories of kids who are trying to support their families, and they try and sell their shoes because they've made a name for themselves, but the NCAA puts a ban on them trying to sell their shoes. And it's gotten to the point now where they're making so much money, and it's going to coaches and it's going to athletic programs. They've had enough of it. And, some of these kids who, really struggled, they come from poor neighborhoods and poor families, they want to sell their shoes to support their family, and the NCAA is not letting them. And now they're starting to make a big stink about it. So I think the NCAA should definitely let the, kids sell their shoes. All right, we got 30 seconds left. Joe, do you have anything to wrap this up with?
Well, I have to say, as a taxpayer, if a public university can somehow get Goldman Sachs to give some kid a $300,000 summer intern to work at Goldman Sachs, then why am I paying taxes to support that particular university? It seems to me that if they have to pay athletes to come play for their school, they don't need my tax dollars to support their institution.
All right. Well, that's it for this episode. Make sure you like us on YouTube and look for more to come.